What's going on, guys? I'm sorry if I look a little tired. I'm still working on my coffee, and I'm sorry if you hear a little background noise. I had to get a load of dishes going. But in this video, I wanted to look at Senseonics stock. They did just report earnings here yesterday, and I wanted to go over it. Now, I did want to say I didn't get a chance to listen to the earnings call, so let me know any important bits of information that you got out of it. I do plan on listening to it later today. When I tried to pull it up last night, it said it was like still compiling the earnings, and I didn't make it for the live earnings call. But let's look at SENS stock. I'm going to look over the chart, give you my thoughts on that. We're going to go over their earnings and what's going on. There's definitely a bit of misconception, and I want to try to do my best to fill you in. And then towards the end, I'll give you my thoughts on where I'm going with Senseonics. Am I going to sell everything? Am I going to let it ride? Am I going to buy more? Now let's get into this video. Consider hitting the like, subscribe, ring the notification bell. Definitely helps me out a lot, guys. Consider checking out the links down below. Stocks, cryptos, also a discount on TurboTax. Check out my membership. It's $2 a month. And let's get into it. So here it is. Let's look over their fourth quarter and 2022 financial results. So in the fourth quarter, they generated 5.6 million in revenue. Full year, they generated 16.4 million. And next point, and this is important, and there's a misconception here, I think. Achieved full year of gross profit for the first time in the company's history. We'll go over that here in a second, but we've also got some good news for their year-long sensor, their 365-day system. They accelerated the 365-day sensor program by fully enrolling the enhanced trial adult cohort with the 365-day sensor configuration in Q3 of 2022 and advanced the program further by receiving FDA IDE approval for the enrollment of a pediatric cohort. Now, an approved IDE permits a device to be shipped lawfully for the purpose of conducting investigations of the device without complying with other requirements of the FD&C, Food, Drug, and Cosmetic Act, that would apply to devices in commercial distribution. Another good thing here is they expanded the nurse practitioner group partnership, focused on increasing U.S. patient access to the Eversense E3 by providing additional convenient in-office and at-home sensor insertion options into over 20 total geographic markets to date. Now, the CMS calendar year 2023 Medicare physician fee schedule initiated updates to national pricing that accounts for the longer 6-month sensor for all 3 CPT codes used for the Eversense E3. And they also closed additional financing from PHC Holdings, consisting of a $15 million equity investment in Senseonics on March 13, and concurrently signed an agreement to exchange the $35 million convertible notes for equity. Now, as a short-term thing, that can be seen as negative. Long-term, that's positive because it's more money for the company. And as said by Tim, not me, Tim, but Tim Goodnow, the CEO of this company, 2022 was a year of notable progress in building the Eversense business with FDA approval, CE mark, and global launch of the E3, and the acceleration of a pivotal trial for the 365-day sensor configuration that we plan will also support both iCGM and pediatric indication. Together with establishing the nurse practitioner group partnership, expanding E3 coverage from Medicare and commercial payers, and coordinating expansion of the Essentia US sales force, we have further advanced important initiatives to help bring the benefits of Eversense long-term implantable CGM to a growing number of patients. Now, as I said earlier, their revenue for the quarter was 5.6 million compared to 4 million in the fourth quarter of 2021, so 1 year ago. Now, US revenue was 3.6 million in this fourth quarter compared to 0.7 in the same prior year period, so the fourth quarter of 2021. But revenue outside the US was 2 million in the fourth quarter compared to 3.3 million in that same prior year period. So they're actually seeing a decline in revenue outside of the US. Fourth quarter 2022 gross profit was 0.6 million, which increased from a gross loss of 0.5 million in the fourth quarter of 2021. We're going to go over that here in a second, and I'll give you, hopefully you can understand more what's going on with this company. Now, they're not necessarily profitable where revenue is concerned. This is actually based on embedded derivatives, convertible notes, things like that. So keep in mind, 16 million in revenue on the year, 5.6 million in the quarter. So fourth quarter R&D, research and development expenses, increased by 4 million year over year to 11.6 million for that quarter. So in this quarter, they burned 11.6 million in cash just for research and development, which definitely shadows their quarterly revenue. Now, this R&D expense might decrease, but this increase was due to investments in product development and clinical trials for next-gen technologies. Now, fourth quarter SG&A, selling, general, and administrative expenses, increased by 2 million year over year to 7.8 million for the fourth quarter. The increase was primarily the result of increased payroll and stock-based compensation. Now this kind of lets you get a little bit better of a story of what's going on here. Net income was 11.6 million, or 2 cents per share, positive 2 cents per share in the fourth quarter of 2022, compared to a net income of 84 million, or 19 cents per share in the fourth quarter of 2021. But these numbers are all due not to their revenue, but to these embedded derivatives. And I'm sure they go into better detail on it in the call, so I might be missing something here. But this might be it here. I'll leave you guys a link below to look over this. A lot of it definitely goes over my head, but in 2019, they did announce pricing of 82 million convertible senior notes, which are due by 2025, but they can't execute those before then. But these notes have a dilutive effect. They give shareholders less of their piece of pie that they originally owned. And it says here, the company estimates that the net proceeds from this offering will be approximately 77 million. So this is likely part of those embedded derivatives. But let me know if you guys listened to the call yet and you have any more information on there. I still do need to listen to the call, and I'm sure they do shed light on that. Now, as for the full year 2022, 16.4 million in revenue compared to 13.7 million in 2021. So they did see an increase year over year in revenue, although not a whole lot. And US revenue grew quite a good bit, 7.9 million in 2022 versus 2.6 million in 2021. However, again, revenue outside of the US on a year over year standpoint also declined, not only quarter over quarter. R&D expenses for the full year 2022 increased by 12.5 million year over year to 39.7 million for the full year. SG&A for the full year was 31.6 million. Net income was 142 million, or 30 cents per share in 2022, and net income increased by 444 million due to a 456 million decrease to other expenses, primarily related to the accounting for embedded derivatives and fair value adjustments, partially offset by an increase in operating expenses. And we do have an update on their cash balance here. They do have cash equivalents, short and long-term investments of 156 million and outstanding debt of 104 million. And as for their 2023 outlook, they do expect roughly 20 to 24 million, representing growth of 22 to 46% compared to the year 2022. But let me know how you guys feel about these numbers. I think there's definitely a misconception going around that they're now profitable somehow due to revenue, when that's not the case. It is actually due to these derivatives, potentially these senior notes that I showed you, but I'm sure they went into good detail on that in the earnings call, maybe in the Q&A. But I will be listening to that in a little bit here, and I'll give some more thoughts on my Discord, so check that out down below. And next up, I did want to pull up the chart and just give you guys some levels to watch out for. Now, I did want to show you guys that as of this upload, it looks like we are potentially about to break this consolidation area. Maybe it continues to chop, but I would look out for this. If we fall from this level, we're going to be testing 79 cents, which was a previous low here. Guess what date this was? This was their May 11 lows. So if it does break from its May 11 lows, that would definitely not be a good sign. And just looking at the chart, it's been in a rough downtrend, and it is still under a declining 50 MA and 200 MA. And as for the 50, 100, and 200 EMA, it is under all three of those as well. And I did want to show you that their next quarter, they are expecting revenue of 37 million. Which is definitely a decrease over some of these previous quarters here. So I'd be cautious with this one. It does look like it's a bit of a bearish chart. If you have high conviction on this, I'm sure you're DCAing or, you know, doing what you do. But I did want to give you my thoughts on my plan for Senseonics. So am I going to be buying? Am I going to be selling? What's my plan? Well, this is a small percentage of my portfolio. It's well under 5%. And while I don't necessarily plan on adding and making it a larger percentage of my portfolio, I also don't plan on selling yet. But realize that this is high risk. They are not profitable technically when looking at revenue, meaning we're likely to see that cash balance go down and that debt potentially go higher. And also the fact that it's under $1, the longer it stays under $1, the more delisting fears we have, and that is something to be aware of. But I did decide I'm going to continue to let this ride. I still believe they have an innovative product, and this is still the early innings of getting more adoption, getting people to understand what this product even is. It's still very under the radar, still not that well known in the CGM community. But as they get more nurses, as it was said earlier, as they get more nurses that can actually do these insertions or implantations, there will obviously be more revenue coming in over time. But the real question is, when does that revenue flip all of their expenses and give them to a profit? Could be potentially years from now. There could be a lot of dilution until then. So just know that there are definitely risks going forward on this, as there are with a lot of these small caps I talk about. So all you bears that always say, you know, how high risk, you need to tell everybody it's so high risk. There you go. It's high risk. Okay. Are you happy? But me, I'm just going to continue to hold. I'm not necessarily going to add, and I'm not planning on selling anytime soon. But let me know what your plans are down below. How do you feel about their last earnings? Thanks as always, guys, and I'll see you later.